Great accountant. She is here to share her expertise with, we know tax season is coming up. So, everyone's starting to get knee deep. I know Afshan is getting knee deep in it already, perhaps. But anyways, so everyone start, compiling your tax papers and, get your thinking caps on. You might get some great tips and tricks from Afshan. Connect with her if you need any assistance. So Afshan, I'm going to hand this over to you. And we look forward to listening to you talk today.
Thank you. Thank you, Mariam. Assalamu alaikum, everyone. It's so nice to virtually meet up. It's been so long. And, regardless of COVID, there's one thing we know about life, death and taxes, right? They don't change. So the tax season has arrived. February 21st was the first date we could have started filing for 2020 taxes, because last year was so different from normal years. Of course, the tax returns are going to be a little bit different as well. So I'll highlight some of the main changes that you probably already are aware of and maybe would like more details. So Mariam and I had discussed that if people have questions, they can, if they can just hold it till later once I'm done talking, and then I will be happy to answer any questions that you have. And as I go along, you'll probably may come up with new questions. So please write them down.
Actually, you can just put them in the chat.
Okay.
So that way we'll just keep track of them and just keep adding to it. Then we can just go through it at the end with Afshan.
Okay, perfect. Okay. So like I said, February 21st was the first day we could start filing our 2020 taxes. Our deadline is April 30th. Last year, it got extended to September 30th because of the way things were going. I don't suspect any big extensions or any extensions this year, just because COVID has sort of normalized, become a normal thing right now. So do start getting your information ready. I've noticed that a lot of people have not received all their slips. So just be patient. I think most employers are running behind. CRA itself is running behind, but that doesn't mean there will be any extensions on the date. It just means that you might receive the information later than usual.
That's 69, right? Yeah.
Okay, so one of the first things that changes every year, and 2020 is no different, is our basic personal amount. So some of you may know it, some of you may not. Basic personal amount is basically the amount that none of us pay any tax on. So all of us for 2020, on the first 13,229, we don't pay any taxes. So if you're in a situation where maybe you're not working and your spouse is working and they're claiming you as a dependent, then you don't lose your basic personal amount. They just claim it on your behalf. So they don't end up paying tax on the first about 26,000 and change. So that amount keeps going up every year. It goes up with inflation. So that's something we need to keep in mind. If you're thinking about getting a job where your spouse may lose that deduction for dependent, always remember that is the 13,000 that you don't pay tax on, and it goes up every year. The other big change this year was working from home. So for those of us who were A, working, and B, working from home, which is most of us, you're allowed to claim a home office deduction, which was not allowed in the past. It was only allowed to certain people. So this year, if you were working from home, you don't require any proof from your employer. You're allowed to claim up to $2 a day, maximum of 200 days. So when you're trying to calculate how many days you were working from home last year, please don't count any statutory holidays or any time off that you have taken from work. So just figure out exactly how many days you're working from home, multiply that by 2, and you can claim that as your home office deduction. You do have a choice of claiming a detailed method. For that, you actually need some kind of proof from your employer. They need to send you a form called T2200S. You can request your employer. I've noticed a lot of employers have sent it already, but if you feel you want to do the detailed method, you can ask them to send it now and you can claim it. Detailed method is a little bit of extra work. You have to go through all of your, some of your utility bills, plus your internet. And if you were a commission employee, then you can also include your property tax. You claim a portion of that in a way that you figure out how much is your home office space is. So most of us usually have a spare room. It could be a 10 by 10 room, 10 by 12. So let's say it's a 10 by 10 room, that's 100 square foot. Your home might be 2,500 square foot or whatever it may be. You claim a portion of that. Now that I've been filing the 2020 taxes, I've noticed for most people, the simple method is working out to be better. And I'm surprised because I thought detailed method you're claiming a lot more, but I think it's because most people's home offices are a lot smaller in proportion to their entire home. So if you're not sure, you can do both calculations and determine which one is better for you. Or if you have someone else preparing your taxes for you, you can mention that you qualify for both if that's the case, and they can do the calculation and tell you which one is worth more. So that's a big advantage. And what it really means is that if you owe taxes, then it reduces your taxes owing by a maximum of 400. If you're getting a refund, it increases your refund by a maximum of 400. So do make sure you take advantage of that if you qualify. So that's one of the biggest changes this year. Another big change this year is our climate action incentive, which most people call carbon tax. So a couple of years ago, carbon tax was introduced as a way to offset the increased cost of carbon that we all have to pay when we buy fuel or whatnot. So this year, the basic amount for a person is $300. So if you're a single person, as long as you meet all the requirements, which are you're a resident of Canada and you've stayed in Canada all year, and you live in one of the 4 provinces, which are Alberta, Saskatchewan, Manitoba, and Ontario, you do qualify. If you do live in a rural community in any of these provinces, and there's a 10% increase. So for one person, it's $300. If you are just a couple, or it's you and your spouse, it's $300 for the first person and $150 for the next person. So that's $450. For each additional children under 18, it's $75 per child. So if you're a family of 4, mom, dad, 2 kids, you're in Ontario and you qualify, it's a $600. And again, if you owe taxes, it reduces your taxes owing by $600. If you have a refund, it increases your refund by $600. So make sure you do apply for that. There's a different calculation for any single parents who might have dependents. It works out to about the same, and you can, of course, apply for that as well. We had this last year too, but it has increased this year. So please make sure you take advantage of it because, for a family of 4, $600 can go a long way. Other big change we had last year is that a lot of people were receiving CERB. CERB was for people who had lost their employment or self-employment income due to COVID, and they had applied to receive at least $2,000 a month. And I think it was maximum of, I'm trying to remember, it was 8 months, I think, so it would be 16,000. Do remember, CERB is taxable income. By now, you should have received a slip called T4A from the government that shows you exactly how much you have received. So if you did receive it, please claim it on your taxes. If it was below 13,000, then obviously there's no taxes on it because, like I said, we don't pay any tax on the first 13,200 that we make, and anything additional will be taxable at the rate that you are taxed on. Also, another different thing this year that you may have noticed, I don't know if everybody reviews their T4s like I do. There's a lot of new boxes on our T4, box 57, 58, 59, 60 that we had never seen before. These are new measures that are introduced by CRA. What they're trying to do is they're asking employers to report how much money was paid to their employees during the eligibility period of CERB. And then they're matching that with the information that they have for people who have received CERB, and they're trying to figure out if someone was receiving CERB while they were working, because some people did either by mistake or they tried to take a chance and see what they could get. So if by mistake you were getting paid through your employer and you had also applied for CERB, that's how CRA would know that you were actually working at the time when you were receiving CERB, and you will ask to pay back whatever portion you are not entitled to. So keep an eye out on that. If you feel that you were not working and your T4 seems to indicate that you were working for that period, do reach out to your employer if there's any correction required, and take care of that if required. So keep that in mind. And if you haven't received your T4A for CERB, consider logging into your CRA My account. And for those of you who have not set it up, I would strongly recommend that you do set it up. It's a bit of a pain because you set it up, you set up passwords, and they mail you all the information. It takes about up to 5 business days to get that information. And once you receive that, only then you can log into your account. And if you do lose your password, it's a bit of a painful process. So do keep it in a secure place where you have access to it at all times. And most of our government issued slips, as well as employer issued slips or bank issued slips, you can find it on your CRMI account, which makes life a little bit easier. You're not looking for your documents. So keep an eye out on that and consider setting that up for yourself. If you had children, any students who were also receiving CERB, the student portion of it, they should have received a T4A as well. And they would, of course, have to file taxes. If they had income in addition to whatever they were receiving from the government, of course, they'll be taxed accordingly. So most people that receive CERB, if they receive the full amount and they did work previously in the year or even after, they can sort of expect to owe taxes. However, what I've seen so far is it hasn't been so bad, just because there's climate action incentive there, there's home office expense deduction there for the time period that they were working. So it hasn't been so brutal, as some people had suspected that they may owe a lot, but I haven't personally seen that yet in the returns that I have done. So keep that in mind. Another thing that happened last year, more so than other years, is a lot of people moved because most of us were working from home. There was no requirement to live close to your employment place. So a lot of people did move. You're allowed to write off your moving expenses if you moved more than 40 kilometers, but the move has to be done in order to be closer to your employer. So I don't believe a lot of people will qualify, because most of us actually moved away from our employer because we're no longer working in our offices, we're working from home. But if you are that person who did move closer to be at your workplace, then you might be qualified to claim moving expenses. And again, it's a portion of what your movers charge you. There are some other things you can write off, a portion of real estate commission, a portion of what you spent to get your home ready for sale. You need to have all the receipts in order because these do generally get reviewed by CRA, so keep that in mind. And if you did sell a home in 2020, you do have to report that on your taxes. There's no actual capital gain or any kind of tax implication if that was your principal residence. You won't be taxed on it, but you do have to report it. CRA has implemented this process, I think, about 3 to 4 years ago, because there's a lot of real estate transactions happening where people are benefiting from selling multiple homes and not claiming the capital gain tax. The CRA actually does check everything with land registry. The only thing is, as we know, CRA is generally behind, so it might take 2 to 3 years for them to actually get to your tax return and make sure that whatever you're reporting actually agrees with land transfer tax or land registry, actually, to make sure that no transaction gets missed. So keep that in mind. Another new trend that I've been noticing, and that's probably because the interest rates are so low, a lot of people are getting into investment properties where they are either pulling out equity or using their own savings to buy a new home that they will be renting. So just remember, rental income, whether your tenants are paying you in cash or whether they're paying you in other way, rental income is reportable income. It's taxable income. You must report it on your taxes. It goes on your personal taxes under real estate rentals, where you claim all of your income and all of your expenses, and then you're taxed accordingly on the net amount. So keep track of whatever income is coming in, keep track of all the expenses. One of the major expenses that you can write off is your mortgage interest. So if you are in a position where you have your own home and now you've bought a secondary investment property, the goal should be to keep the mortgage higher on your investment property, because you can actually write off the interest, but you cannot write off principal. So keep that in mind. So a lot of people, if they buy investment property, they feel like their cash flow is not really there. They're breaking even, or sometimes they even have to pay out of pocket, and they feel that they shouldn't be taxed on it. Unfortunately, that's not the case, because your biggest expense is usually your mortgage payments, the principal amount. You can't write that off anyways. So you will be taxed on whatever the positive net rental income is. So keep that in mind. And just remember, anytime you're making a claim on your taxes for anything, always keep your receipts. CRA has a right to ask for them, and they have up to 7 years to ask for it. So if you do your 2020 taxes and you've claimed something, they could ask you in 2026 to provide you with that document. And the onus is always on the taxpayer to provide that document. I always compare it to taking the GO train. It's on you to buy your ticket. Nobody really checks it. But the day somebody comes and checks if you bought your ticket or not, that's when you're in trouble if you didn't buy it. So CRA is pretty much the same way. They accept everything the way you submit it, and then it's within their rights to come back to you within 7 years and review anything that they want to. Other than that, these are the biggest changes. Other than that, we have the normal typical stuff. Make sure if you have medical expenses, you claim them. A lot of people have their employers that cover their medical expenses, but there's always a certain amount that's not covered. So do keep track of it. It has to be more than 3% of your net income for you to claim it. And it usually makes sense for the lower earning spouse to claim the medical expenses. And again, you need to keep the receipts. Best way is to just scan them and save it in a cloud-based system so you can access them up to 7 years from now. There's also charitable donations. As long as donations were made to a registered charity, you should have a receipt. And if you haven't received one, reach out to whomever you had donated to so you can get a receipt and you can claim them. You don't have to claim them in the year that you made the charitable contribution. You can do it in a future year if it makes more sense to do that. And it always makes more sense for the higher earning spouse to claim charitable donations. So keep those in mind. If you had children going into university, if they want and if you want, you can claim a portion of their tuition up to $5,000. You get a bit of a deduction. It's not huge, but it is something that you should consider. So you basically need to have a conversation with your child. Either they can carry it forward and use it for any future use. It doesn't expire. So if they wanted to use it 20 years from now, they can do that. Or they can transfer you up to 5,000 of it and you can claim it. It doesn't mean that your taxes only go down by 5,000 or your refund increases by 5,000. It just gives you a bit of a deduction, which I think is nice to have. So do consider that if you do have children that are in post-secondary, and it can only be done in the year that they actually went to school. So if you decide to do that next year for the 2020 tuition, you cannot do that. It must be done on the year that they went to school. So those are the big things for personal taxes, the main changes, I should say. Everything else has pretty much stayed constant. Our deadline is the same. The filing process is the same. CRA is really encouraging people to file online. If you do want to send your return by mail, it's called snail mail for a reason. It could take them up to 3 to 6 months to process it. Same thing with your payment. Yes, you can get paid by check, but I would encourage you to sign up for electronic deposit so you can get your money sooner. And if you owe money, April 30th is when you have to pay. If you file now, you have between now and April 30th to get the money to CRA. So keep that in mind. I don't know how many self-employed folks are here. And I guess Miriam might know or might not know. So I'll just touch a little bit on what self-employed taxes look like. So self-employed people could be a sole proprietor where they own the business personally, or they could be a corporation. So if you're a sole proprietor, you may or may not be a registered business. Registered business basically means they operate under a different name. So for example, I may have a business called ABC Taxes. I would have to register that. It's a $65 fee and the name is good for 5 years. Or you may just operate under your own name. So for example, if I just operate under Afshan Ahmed, I don't need to register anything. I'm just considered self-employed. CRA expects you to report any self-employment income, whether you're receiving it in cash or any other methods. CRA does expect you to keep a separate bank account for your personal and your business. So your business income and expenses should not be mixed up with your personal. And then you don't have a separate tax return to do. It's the same return as a personal tax return, but it's an additional form for self-employed income. So it's good to know that you can write off a lot of expenses. So people ask, what can I write off? And the general answer, without getting into details, is any money that you've spent because of the business, you get to write it off. So it could be supplies you've bought, it could be the advertising you're doing, it could be the phone system you had to put in place, it could be any licenses you had to get. So anything that you have spent that you wouldn't have spent, but you're spending now because of the business, is generally considered a write-off. So you need to, again, keep your receipts. Some people think they can just keep their bank statement and credit card statements. That's unfortunately not sufficient. You need to have your actual receipts. And again, I'll go back to saying the same thing, that just scan them, save them somewhere where they're accessible for 7 years. So do keep that in mind. If you are self-employed. Last year, I noticed there was a flux of inquiries when CERB came out, that people were all of a sudden claiming that they had made 5,000 in income before, and now they qualify for CERB, but they had never registered their business. I believe some of them were legit inquiries, and some of them were probably tax planning, where they thought they could qualify to get this money because they will just show 5,000 of income from a previous year. So what I would say for that is that if you do have a business, it's a good idea to claim your income and expenses. It's a good idea to perhaps register it, because we really don't know what's ahead in our future. If we're going to face more financial difficulties, if COVID continues, or we see a new strain, or I don't know where our economy is going. So if you've always reported your income and expenses properly, you might be entitled to relief programs because you are considered self-employed, and there's no question, because you've always been transparent, you've always reported this. We did see there were a lot of relief programs that were created for small businesses. SIBA was probably the most popular one, which is where the businesses received 40,000 in funding, and then was followed up by another 20,000 in funding. And I think that's when a lot of people realized, had they treated their businesses more seriously, had they claimed the income and expenses appropriately, they would have access to a lot of additional funds. And now that they might be suffering because the business is not doing well, they hadn't taken the right steps in the past to claim any of the income or expenses. So now, unfortunately, they're out of luck. So that's one lesson I think we all should learn. If we are in a position where we do have businesses, it definitely makes sense to report that income, pay the taxes that you have to. And in the event that you may need some help because of things that are out of your control, such as COVID, you're entitled to any relief funds that are out there. So do keep that in mind. So we've touched about personal taxes, we touched on rental, we touched on students that are in university, and we've touched on self-employment. I don't know if you guys want me to go into more details, or if you guys have any specific questions, we can start looking into those. Miriam, do we have any questions?
None so far. So if anyone has any questions, please feel free to speak up. We do have some time that I'm sure will be very happy to give you the details. I have a question.
Let's go.
Is there anything, like, for example, I'm a caregiver for my mother, right? But I'm not sure, like, is there anything that I can claim? And if I can, what kind of proof do I need to show that I live with her and I'm her caregiver?
So there are definitely things you can claim for being a caregiver to a parent or a child, or even a grandparent. The requirements keep changing every year, but generally you have to be in a position to be able to prove that you were taking care of them, and they required being taken care of. So they don't have to be disabled or anything, because disability tax credit is a whole different thing, but they might be because of their old age, they may rely on you for certain things. And usually if you are asked for any information, usually just a doctor's letter from your parent's doctor is sufficient to say that this person has such and such ailments, which requires them, someone driving them to their appointments, or someone assisting them with household chores, and you should be able to claim it. So the first year you do it, you might get a review where you need to submit some information. In future years, you should be okay.
Okay.
And we should talk about disability tax credit as well. So a lot of people think disability means you can't move, or you can't walk, or you cannot do your daily day-to-day things. Disability is actually fairly broadly defined. So if you suffer from clinical depression, where you might be still working full-time, still be living your life, but you suffer from a disease which is called depression, you might be able to qualify. You might suffer from sleep apnea, where you need a certain equipment installed so you can sleep at night properly. You may want to check with your doctor if you qualify for disability tax credit. Unfortunately, a lot of children these days may have certain issues that could qualify under disability. So don't think of disability as someone who just cannot do anything. You might still be carrying out your day-to-day life, but you have you have this thing that could qualify. So the best way is, first of all, ask your doctor. All doctors know about it. They generally charge $100 to fill out the disability tax form. Ask them, do you think I would qualify? They generally have a pretty good idea. If they say yes, I would say spend the $100, get the application filled out. Once the application has been filled out, you mail it to CRA. The address is listed right on the application. In pre-COVID times, it used to take up to 6 months to process those applications. I assume it's a bit longer now. And remember, these can be backdated. So if your doctor says this really started back in 2013, your doctor, a CRA will backdate it to 2013. It can go back up to 10 years. And then you might have to adjust your returns because now you're claiming disability. A lot of people, or some people I should say, may not be working full-time because of their disability, so they can transfer that to their spouse. So it's not completely wasted. So that's something I would encourage you to look into if you think you qualify.
What video was that again, Afshan, that you had mentioned to watch?
No video.
Oh, I thought I heard you say something. Sorry. Okay.
I'm not that much fun.
I misheard. Yeah. I have another question.
Sure.
I know rental income is reportable income, but are you aware of any, or can you share of any tips and trips to help ease that hit that we have, because it increases your income and usually can throw you into a different tax bracket. But you know, the expenses are still there. It's not like that money really came to me. Whatever I made is going right back into that.
Right.
Example, like the mortgage payment and property taxes and insurances and all of that. Is there anything that has recently come into play or that is out there for like landlords to kind of?
So the only legal tax shield we really have is RSPs, right? So you may want to contribute into it. The face you made, everybody makes that face because people have lost faith in RSPs, but just because the interest rates are so low, right?
Yeah. Well, the thing is, you need money to put into the RSP.
Well, exactly. So when you have that high bill, just remember the real estate is, the values are going up. When you eventually sell that house, that's where you will make the money. But try to keep all the receipts if you're getting any work done. Because mostly it's on the landlord to, if there's any plumbing issues or any repairs and maintenance. A lot of us like to pay cash, so we don't pay the 13%. If you already have a T4 income, the chances are your tax bracket is a lot more than 13%. So I would rather pay the 13% and get an invoice so I can write this off. And of course, like I said, if possible, try to keep the mortgage higher on the rental property so your mortgage interest is higher. Because although you can't write off your principal, you can write off your mortgage interest. Sorry.
Require more in-depth.
Yeah, sorry, not a straight yes or no.
Well, we do have a question. Question is, when is it good to draw CPP? I guess age 60. Is that, I think,
as of 60, you're allowed. You may not want to. You can still contribute up to 65. Difficult question to answer. Everyone's situation is different. So if you're still working and you start drawing CPP, your tax liability will go up. It may or may not be worth your while to do that. Most of us it seems that we're going to be living longer than our parents did, just because of the, improved lifestyle. It doesn't seem like it, but apparently. So if you start drawing it at 60 and, if you're still kicking around at 85, I can't say what's a reasonable age. I would say once you have stopped working. So for most people, that's at least at 65. And if you're still working at 65, then kudos to you.
Anyone else? Take advantage of our tax.
Not the most exciting topic on a Sunday afternoon.
So is anything else in the chat? Or feel free to speak up. That's fine.
So I have a question for Afshan.
Yes, ma'am.
I promise I'll be nice. So which method is better for claiming home office? A simple method or a detailed one?
So most of us won't qualify for detail because we need an additional form from our employer, which I understand you can still request from your employer if you haven't received it. But from what I have seen in the returns that I've done, the simple method is easier. Not easier, it is easier, but it's actually more beneficial. But if you really, really want to know, do both. and then compare the results. And the difference is usually within $50 or so, but I'd rather have you the extra $50 in your pocket than CRA's. So if you really want to know, do both, compare the differences, whether you're doing it yourself or having an accountant or tax preparer do it for you. But if you just want to take it easy, just go with the simple method.
Okay, thank you. And another one, you may have already covered this, but in terms of invoices and paperwork that you've submitted, how many years for personal do we need to keep?
So it's 7 years from the, so 6 years from the time you file it. So for example, if you decided not to file your taxes for 2018 and 19, and you were doing it now, then it's 6 years from now, which will take you, up till 2027, even though it's from older paperwork, but because you filed late. So just keep in mind 7 years, even though it says 6 years from the year you file, because you're always filing a year late. We're filing 2020 and 21. So always just think whenever you receive, you have to have it for 7 years from then.
Okay, thank you.
Welcome.
Hi, Afshan. It's Arshia. I have a question for you.
I would like to see you.
Oh, I'm driving, hon. You don't want to see me. I just had a very quick question.
Sure.
I know you touched on with if children are going to school, the 5,000 and all of that. That's great. I just wanted to get a little bit sense. My first child is going to university this year, and inshallah he's going. Yeah, thank you. Inshallah he'll get into the university he wants. But we have this really interesting RESP contribution where they don't give us all the money in the first year. They break it down every year.
That's right.
I don't know. Okay. So what is the best way to go about this? I don't know if some people say that it's better to withdraw everything in the first year and make sure, because he's going to live in residence.
Right.
Or should I, and how is that going to impact his OSAP? How does RESP, taxes, and OSAP, all of that work? If you could just give me a little bit of an intro on a high level, that'll be great.
Okay, so RESP, Arshia, you're not the only one. Most of them work in a way that you only get to take out a certain amount each year. I haven't seen it often where you can take out the whole amount. And I wouldn't suggest that anyway, especially if you were thinking about OSAP, because all of a sudden you got this influx of income and the child may not qualify because of that. So I think it does make sense to sort of break it up. So when money is taken out of RESP, it's considered income, but it's not your income, it's your child's income. So your son will receive a slip sometime the next year that shows how much you took out of RESP, and it's taxable income. But of course, most students don't have a lot of income happening, so it might still be under the personal amount where he doesn't have to pay tax. So there's that. And then if he qualifies, and if I know your son well, I know he will qualify for certain bursaries or scholarships, inshallah.
Inshallah.
So when he receives that, as long as he's a student and he continues to stay a student during the year, that's not taxable either. So it has to be reported, but there is no tax obligation on it. And if he happened to be maybe working in the summer or something where he has had some income, so between the scholarship and bursaries and the RESP and his employment income, he might go over the personal amount where he does have taxable income. So he might end up like $15,000 to $20,000 of income he had where he didn't have to pay tax on the first $13,000, but he does have to pay tax on the remainder. Just remember the tax rate will be low because his income is low, and he's also welcome to use any of his education, his tuition credit, to reduce his taxes instead of passing it on to you. Or he can claim a portion and give you a portion. So there's that option. I always advise young kids that it may seem like a lot to owe $300-400 now, but it makes sense to sort of save your tuition credit for future. When you have a mortgage to pay and kids to take care of, you'd rather have a bigger refund than have it now. But trust me, no one listens.
Okay, and I just want to comment about the OSAP part.
Yes.
Okay, so I work in financial aid. So OSAP, you do not have to declare RESPs. They used to do that in the past. So in the last few years, you don't need to declare it. You're actually expected to help fund your own child's education. So
okay, good to know.
So you don't need to declare it on your application. Okay, so.
Perfect.
Okay.
You don't need to declare it on what application?
On your
Kubra?
OSAP application, you don't have to declare your RESP. Any education
Oh.
money that you're
Mhm.
using, that, you know, like they're not, obviously the government is encouraging you to save money for your child, right? So they're not going
Right.
to ask you to declare it. They used to do that in the past. It was,
Okay.
so now you don't have
Okay.
to even put that money
That's
in.
great news.
So if
Yeah.
let's say you
Yeah.
put
Yeah.
$20,000 and you give that money to your child, right? As long as it's going, you know, like obviously you're going to be giving it for rent, for residence. You don't need to declare that on your application. So they're not.
Oh, that's great.
So they're not looking at that money. But again, the other side is they do expect you to at least come up with a lot, you know, to fund a major portion of it, 4,000. Like
Yeah.
in summer, if you're working, they expect the student to bring in onto the table $4,000 minimum. If you can't do that,
Yeah.
but again, that rule may change this year because OSAP is changing, right? Because every year things have changed.
Sorry, OSAP is what?
OSAP is constantly changing. The rules keep
Yeah.
on changing. And, you know, because of COVID this year, they've made some changes saying you don't need to hand in certain documents. They've taken away a few of the requirements. So maybe just
Okay.
hang on and let's see. They haven't released the new application for the fall yet, right? So,
Okay.
so anyways,
Okay.
I started to interrupt. I'll let Afshan.
I always learn something new with Kubra.
Oh, no.
Thank you. Thank you both. Thank you.
You're welcome.
I have a question.
Hi, Mumtaz.
Assalamu alaikum. I have a question for Afshan.
Sure.
Now at work, some days, like, you know, we normally don't work just 40 hours. There are times where we go overtime and we do end up working a lot more. And I've always heard girls say that, no, you don't want to work too much because you end up paying more taxes. How does that work? And then is that how it is? Like, I really don't understand it much.
Okay, so yeah, what you're hearing is correct. So the way our tax system works is that we are a tiered system. So we pay a different tax rate depending on where our income lies. So for example, if it's 35,000 or less, you might be paying 15%. Between 35,000 and let's say 70,000, you're paying 20% for that bracket only. And then anything additional is in a different bracket. So it's a tiered system. So a lot of times what happens is when you do overtime, you may have gone over your income tax bracket. So while you were paying 15% tax on your regular income, all of a sudden you're paying 22% or 30% on this additional income. So a lot of people would come out and say, you know, it wasn't worth sacrificing my weekend to get just a few $100 when I thought I would get a lot more. So you may want to be cognizant of your tax bracket. It's a little bit more complex than that. But generally, if it's going to jump you to the next tax bracket, it's usually not worth your while. It's probably better to just take a vacation day in lieu of overtime, if that's an option for you.
Thank you. Thank you. And thank you, Faiza. Thanks.
Is Faiza here? And there's no trouble? No questions, no cat videos, nothing?
I have a question for them.
Of course you do. Hello.
I was gonna say, since I have one job now, so are you hiring? Like, for the tax season. Do you want my resume?
Yes, I need a PR
Actually, I'll just work
consultant.
for food. If you can feed me, and I'll just work for food.
Have you met me? Do you know how I cook?
But we'll order.
I don't know about Faiza. You're not very reliable. I don't know if I would have.
Well, she only has one job now, so she'll be more reliable.
Okay, so we also have Naseem on the phone. She's got her hands up. I think she wants to ask something.
A real question.
Okay, so Naseem, let's ask her first. She's our president, I think, from Edmonton. So, Naseem, did you want to?
I think she did ask a question earlier.
Did she? Because she still has her hand up. I'm trying.
Yeah.
To
Yeah, you know what? I don't know why my hand is sticking out. I didn't have a sheet. Yeah, she's done such a good job, so I don't have.
Naseem, you're keeping me on my toes. I'm worried about all these questions coming from you.
No. I'm okay. Actually, I'm a CPA myself and a CFO.
Oh, perfect. Did I make any mistakes?
No, you did such a good job. Yeah.
Thank you. I appreciate
Actually,
that.
you know what? I just have a suggestion. Kubra, you still on?
I'm here.
Yeah, that we could. I just feel that we could teach the membership right across Canada on QuickBooks, and I would love to do that. But I want to make sure that I'm perfect on that. because I think that would be an excellent idea to work with everybody.
I'm sorry, I don't know.
QuickBooks is an accounting package. It's an accounting package.
Tax package.
Yeah, if we have a lot of
Accounting.
self-employed folks here, then definitely that's something we can look at.
Yeah, we can. It will be such. Maybe we can. Both Afshan and I can, in collaboration, we can teach everybody, and that would be. Mind you,
That'd be great.
I'm just thinking, just doing the accounting package, not into go out to different modules like they have the sales and the purchases and the payroll module. That probably would be too much. But even if you were able to do your own accounting and have your own
For
reports,
sure.
it would be
I think
such
for
a good
people
idea.
who are starting out their own businesses, that's a great help. And also it's a great way to understand where the money is coming and going.
Yeah,
I'm sure. I use myself. I use for my own business. I use more Sage.
Okay.
I always use that. But QuickBooks is simple, easy, and if you make an error, you can delete it. There is no audit trail as well, right?
Yes, it's an accountant's worst nightmare and best solution for a business owner.
Yeah, but let's Kubra, let's stick in with all that.
No, we'll do it. You know me.
Yeah,
That's a great suggestion.
Right? And I'm going to rope Afshan, and she's scared of me now because I do rope people in.
Yeah. Okay. All right.
I can never say no
what
to
we'll do,
Kubra.
Naseem, we'll work on this one. And yesterday I was in a meeting with Minister Monsef.
Were you? Oh my God.
Yeah. So Islamic Relief had this online meeting, and I was really surprised to hear that's only 17% of the businesses, small businesses in Canada are owned by women. That's shocking for me to hear.
Women or Muslim women?
Women. It just said women. And I heard that.
Wow.
And you know what she says? The women are the one who are suffering right now. There's been such, people have lost jobs. And what you're doing, Afshan, today is so commendable because you're giving women knowledge. And now that Naseem's come up with this great idea, I really think we need something like this. We need to give women an opportunity to grow and learn and give them the tools that they can become successful. So don't worry, I'm gonna pester both of you. Let's do it after Ramadan because
let's do it after tax season and Ramadan.
After Ramadan. Maybe we'll do it in May, June, and we'll get CCMW National to help recruit, and let's teach women across Canada how they can become better business people. Let's use this fantastic
and just better at managing money. I think that's where women struggle.
Absolutely.
Okay, so
100%.
I have also another suggestion. I'm also a certified financial planner myself.
Oh, wow.
So
oh, perfect.
Yeah, so I could we could start some sessions on on financial planning, and I can talk to my association, but because I'm retired, I don't have the insurance to cover me. Okay.
Right.
So malpractice. So I can talk to my either CIFPS or CFP and ask them to give us a module in how do I volunteer and teach the ladies, the women, just volunteering.
I think that's a great idea.
That's wonderful.
Yes.
Yeah,
and
I'd love to do that.
And you're based, is it Edmonton? You're Edmonton or?
Yeah, so I have two. I'm either Edmonton or Vancouver, but with Zoom doesn't make any difference now.
No,
right?
but it's so fantastic. A year ago, if someone said I'd be doing Zoom meetings, I'd probably laugh.
Yeah, that's right. I remember, a few years ago, we were talking about webinar when I was in Nairobi.
Yes.
I used to go and help them with dental management practices. And everybody said like a webinar, it was like a taboo word.
Yes.
But now it's not.
Yeah. But now we've all jumped on and, it's so wonderful that you have this great idea. And I just want to mention Mumtaz's name today. Happy birthday, Mumtaz. I could see in the background.
Yes.
Oh, happy birthday.
Thank you.
Is that a banner behind your head? Let's see it. Let's see your banner. Come on, girl.
Happy birthday.
I can see happy.
Oh, that's so nice.
Oh, happy birthday. What are you doing today?
Thank you. Just relaxing and spending the day with the
Oh, that's so sweet.
That is so nice.
Thank you.
Enjoy your day.
I hope you get spoiled today.
I'm getting spoiled today, yes. I had a lovely surprise this morning. A friend of mine, Miss Mariam, she knocked on my door. Flowers for me. Gajar halwa. It was lovely.
That's nice.
What?
Mariam, it's my birthday.
Do you still have it? Gajar ka halwa at, man. I'm coming.
She
I'm
made
too-
My
gajar ka halwa.
birthday.
She made it especially for me.
Okay, and then tomorrow she's gonna make you do a 40-minute walk. Don't worry.
Yes.
Mariam, I'm coming over.
Mariam,
Anytime,
my birthday
Faisal.
is tomorrow, Mariam. My birthday is tomorrow.
Okay,
Mine is
well,
today.
I still have some at home. So whoever wants it, you need to drive over and I'll give you some.
You can.
Oh, Mariam, you're gonna
I'll
regret
actually
this.
come over.
You're gonna regret this.
I
And it's
know,
really good.
because I'm starting my car.
It's worth the drive, girls. I'll tell you, it's worth the drive because it's really good.
Okay, so I have to go. I gotta drive to Mariam's now.
Oh no,
First
Faiza's
come, first
running
served.
already. I know Faiza's logging off to route.
I'm totally logging off. I'll join Mariam's Zoom from there.
Yeah. Yeah, great job, Afshan. Very nice.
Thank you,
Excellent.
Masim. I
Okay,
really
sorry, I'm
appreciate
gonna,
it. Thank
okay,
you.
let's go back to the topic at hand. Is there any other questions that we have?
Yeah, is there anything else, guys? We have about 8
I do. I have a question.
Okay.
Yes.
I have a question. I don't know if I missed it and Afshan already talked about it. I started a bit
That's
late.
okay.
I wanted to know just light about tax-free savings account. How does that help, or is it worth getting into it?
Good
So
question.
tax-free saving is exactly the opposite of RRSP. The reason it's called tax-free is that there's no tax implication. So if you recall, if you do RRSP contributions, it gives you a tax saving, right? Because it reduces your income and you get a better refund. Tax-free savings is the opposite. If you do a contribution to your TFSA, you get no benefit from it. But on the flip side, when you take money out of your TFSA, because you didn't have any tax consequences at that time, you have no consequences this time. RRSPs, on the other hand, when you take money out, you'll be taxed on it because you got a tax deduction at the time. So how do you decide which one to do? It's good to have a balanced approach where you're investing a little bit in both. You have your contribution room for each year. It's on your notice of assessment that tells you how much you're allowed to contribute. Please try to stay within that because there is penalties for going over your contribution room. I would say if you need the money soon, so for example, you might be thinking about buying a home, you might be thinking of doing some renovations or a kid going to school or something that you need money for, it's best to put it in TFSA and just take it out when you need it. If it's something for the long term, maybe you're thinking at retirement, I'll take this money out, I would say put it in your RRSPs because you're not going to be touching it and it will grow for you and it will give you a tax saving when you do the contribution. Because when we take money, sorry, Mary, 1 second. When you take out the money prematurely, not only do you pay tax on the RSPs, but there's also the institutions charge you a fee for early withdrawal. So it's just not worth your while. If you can plan it, you think you're going to need the money in the next 2 to 5 years, put it in your TFSA. Sorry, Mariam, go ahead.
No, it's okay. So what is the benefit, if at all, like rather than just putting it under your mattress, for example, or some account, savings account and TFSA, there must be something. Like why like if you are buying, for example, mutual funds or GICs, you can park it under your TFSA, right? Okay. You only pay tax on the growth of the money. Yeah.
So that way. And when you put money under the mattress, it doesn't grow.
No.
When you put it elsewhere, it can grow, right? Like we saw with COVID, like the market crashed and then market went nuts. So some people made thousands of dollars just between March and March, right? If your timing was right, some people lost thousands of dollars too.
Yeah.
So there's that, and you're only paying tax on the growth of your money.
Got it. Okay. Thank you.
Welcome.
I just want to let anybody know that it's Rabia here. I have my financial license and working with Prime America. So if you're
excellent. I didn't know that. Hi, Rabia.
Good to know.
RRSPs or TFSAs or life insurance, give me a call. We'll set you up.
Perfect.
Nice. Any other questions, guys? Now's your chance.
No, I think everyone's getting in their car to get the halwa.
Got about 5 minutes. Anything? How's everyone doing? I certainly enjoyed this hour with Afshan and all.
Yeah, right. Taxes on a Sunday afternoon. I'm surprised people showed up.
Yeah, but it's a necessary evil.
It's a necessary evil, absolutely.
Right?
Death and taxes.
You did a great job, very clear. And
yeah.
Thank you, appreciate it. It's nice to see familiar faces. It's been a while.
Yeah, and you're very knowledgeable. You were able to explain it to even people like me who know nothing. So
I think everybody was like fairly smart. I had a tough crowd.
No.
Listen, we're always learning.
We are. So I'm going to do a plug for my paint night next week. It's Saturday. Please join me. It's 3 to 5. I've sent everyone the list. I went really cheap. I think it's $15. Go to the dollar store. If you can't figure it out, message me right away. I will help you shop if you need help, right? So I picked out 5 primary colors. We're going to mix some colors. The canvas is like $2. So, and then we're just going to sit around, paint. And I think it's a good excuse. Everyone order, we're first of all, we'll paint together. We're all going to show each other paintings. And then afterwards, if, since we're all going to be lazy like me, we're going to order food. We can enjoy it. Anyways, it's just, if this works well, inshallah, I will plan some future events. I know there's other ladies who would like to do some stuff. I've already had some requests, to do maybe, I was talking to Miriam about this. We want to do, maybe get Diana to do, like, remember the fruit chot?
Oh.
Yeah. And, we can teach us some cute recipes. I was thinking her and Sophie's daughter, but I still have to formalize this. I really don't want to plan too much around Ramadan. I want to do some ibadat because I'm so bad. Like, I need to make sure I pray on time, do my proper, things. But if you have ideas, let me know. But please join me next week for our paint nights, our very first virtual paint night. And
it's a lovely painting.
Yeah, we're doing it's so simple actually. Shazia helped me pick it out. So it's like trees. So it's really super easy, and the kids could do it. We all can do it, I think. And then if it is successful, we'll do it again. And if we hired somebody, average is like $40, right?
That's too much.
Even $20. They even charge you just to even log in. So we're gonna do it for free, guys.
Oh, that's great.
But I'm accepting donations. I'm accepting donations. Halwa can be dropped to my house.
Oh my God.
Mariam's halwa is famous.
It's not famous. My first did it on my own, and it was good.
Actually, we like your mango mousse, and cheesecake is good. Let's put the request in now.
She bakes really good cinnamon buns.
Oh, yummy.
I think anything she makes is good. It doesn't matter what it is.
Yes, I call her dessert queen.
She cooks from her heart.
For the students, she does a lot, mashallah. She's done a really good contribution in the past few years for the students. She makes the desserts.
Yes.
Last year she made I don't know, maybe 300 cookies she made. It's like, I don't know how she did it. She was baking all day.
Wow.
But mashallah, she's got a big heart.
Mashallah.
She's really done a great contribution for CCMW, especially for the students. She helps all the time.
Oh my goodness.
She's been doing it for many years.
Didn't do anything, just bake.
Yeah. Actually,
it takes a lot. I can imagine. I bake a little cake and I've got so many dishes. It's crazy.
Talking about food, Ruby, I'm really missing your Halim. Ruby still here?
Is Ruby there still? Yeah.
I am planning on making it in Ramadan again for CCMW fundraising.
Wow.
Yes.
Nice.
Yes.
I will try my best, and if we can continue doing the same, support me, and all the proceed will go to IDRF. Actually, I'm planning on doing one every weekend if I can.
Oh my God!
Give me strength to do it.
Wow.
And if I get enough orders, I'll give the charity to 3 different charitable foundations.
Nice.
Mashallah, very good.
Good to know. You're awesome.
So Ruby's cooking on April 18th for the students.
Yes, inshallah.
From CCMW. April 18th she's doing it. Mashallah.
Right. And then for everyone who doesn't
lots of du'as.
Yeah, so if everyone doesn't know, we are doing a fundraiser for Islamic Relief first weekend of April, but so we're going to ask you to help buy baklava. It'll be we're going to help deliver it all over Durham, and it's going to be all proceeds are going to go to Yemen. It's going to Yemen.
Oh, very good.
Mashallah.
6 pieces for $12, and it's very tasty. And a woman here locally makes it, so I think it'll be nice as a gift. You can give it to your neighbors, your friends. And
is that the lady from Ajax?
That's right. Shut Out Dessert.
Oh my God, they're so good.
Yeah, so I spoke.
That's the only problem.
Yeah, that's okay.
It's not going to make it to the neighbors.
No.
Yeah, but
I had to hide it from my kids. I ate them all. It's so good.
Yeah.
Like way better than store-bought.
Sorry, ladies. I just want to tell you that they are collecting donations for Yemen in a masjid in Markham. I just went and I dropped some stuff. So anybody wants to drop stuff, food or anything, I think they're sending a trailer or something.
Oh,
they're accepting
okay.
clothes.